silver is primarily an industrial metal, and we've seen demand for silver in industry increasing year over year. However, supply isn't keeping up. In fact, supply isn't just not keeping up, supply is actually going down. So that's kind of an interesting dynamic in silver because we have demand growing, supply shrinking. And if you look at basic supply and demand, that means one thing: price is going to go higher.
Alan Hibbard's with us from joining us, Precious Metals Alternative Money Specialist from GoldSilver.com. Good to have you with us here, and happy Monday. Let's begin with the bid we're seeing as we begin this week in gold. What's behind the move up here?
Well, thanks for having me, Ben. It's really a few things. I mean, we've seen central bank gold buying increasing since 2016, so they're a huge factor in this. Also, retail demand is really high. We've seen Costco and Walmart selling gold, and that's atypical, and investors are absolutely flooding into those markets. So it's really, demand is coming from absolutely everywhere, from the retail investor to central banks and everything in between. People are concerned about inflation, of course, geopolitical tensions, and the state of the economy. It might not be as strong as our central bankers would have us believe. So we're seeing demand from absolutely everywhere right now.
Yeah, one of the things we were focused on into the end of the year was definitely that trend, Al, in terms of central bank demand for gold. Costco, the Walmarts, again, you know, we were joking around about the stories when they would release these coins, they would get bought up immediately. The demand was definitely present there. Talk to us a little bit about the current rate environment and how this has supported prices also.
Well, the standard narrative is basically when interest rates come down, that makes gold look more attractive. And there is truth to that in the short term. However, when we zoom out and look at the long term, we actually see data that gold can perform extremely well in high interest rate environments. And so if you look at the precious metals bull market of the 1970s, we actually had rising rates for over 10 years. And gold performed extremely well, moved from $35 an ounce to $873. That was a gain of like 25x in 10 years in an increasing interest rate environment. I would expect something very similar to play out over the next 10 years, even though we might get some pauses where interest rates come down, possibly this year or next year. But in the long term, I'm expecting rising interest rates and a pretty big precious metals bull market.
Alan, I feel like a big part of this has also been somewhat of a tense, ongoing, and volatile geopolitical environment that we're seeing here, helping support prices also.
Yeah, you're absolutely right. I mean, we have wars in many places in the world. It's kind of hard to keep track. And of course, the United States in particular, the global leader in terms of economics and setting interest rates, is participating in a lot of those conflicts. And so that kind of sends a signal to the rest of the world that there's unease and things could shake out in a number of different directions. And so when you have the United States creating all different currency and really setting interest rate policy for the rest of the world, we get a lot of tensions that build up and things could move in any direction, but usually that's bullish for gold.
Yeah, unease, uncertainty about the Fed. I feel like those are very bullish for gold here. Let's talk about how we've also seen some of the industrial metals, copper, silver on the move as well. I like how you note that silver is an industrial metal first, a monetary one second. For some time now, consumers and producers have enjoyed lower prices, but that's starting to change.
Yeah, exactly. So like you say, silver is primarily an industrial metal, and we've seen demand for silver in industry increasing year over year. However, supply isn't keeping up. In fact, supply isn't just not keeping up, supply is actually going down. So that's kind of an interesting dynamic in silver because we have demand growing, supply shrinking. And if you look at basic supply and demand, that means one thing: price is going to go higher. So that's really what we're seeing in silver so far. It's up roughly 35% from its lows earlier this year. That's a pretty big move. I'm expecting that move to continue this year and in future years.
When you're talking higher, I'm looking on the chart here, April 2011. I remember the spring of, we were up around $50, right? Do you see us achieving those levels? And ultimately, what does this do to the gold-silver ratio? Do you feel like gold can continue to sustain this momentum as well?
I do think both metals will sustain their momentum. And if you remember, silver hit its all-time high in January of 1980. It just crept past $50 an ounce. And then, like you say, in 2011, it got extremely close to breaking that record in April. And so I do think we are going to break that record again. It's only a matter of time. I don't know if it's going to happen this year, but certainly very soon. And yes, the gold-silver ratio was up over 100 for a while, which is insanely high in terms of a long-term basis. Right now, I think we're just under 80, maybe around 75. But I would expect that to come down maybe by half, so maybe to like 40, maybe even more than that. So that would basically mean that silver would outperform gold by a factor of 2 in the coming years, but I expect both metals to do very well.
Alan, lastly, talk to us a little bit about where this kind of rosy picture for the metals could ultimately get derailed. I mean, the question, what would it take? A faltering economy? Would it take a pivot from the Fed? Maybe inflationary pressures coming back into play to where we would need to see a higher rate environment, maybe revisit that 5% peak? I mean, this is a pretty rosy picture, a pretty bullish scenario playing out, it seems like, but there's always kind of that the unknown out there, I feel like.
Yeah, it's a great question. And we have to remember that the economy moves in cycles. There are short-term cycles, medium-term cycles, long-term cycles. And one of the best cycles you can look at is actually the Dow-Gold ratio, because it kind of shows you how capital moves into the centralized part of the economy, into companies, stocks and bonds and so forth. And it also moves into the decentralized part of the economy, gold, which no single entity has control over. And if we look at the the Dow-Gold ratio over time, we can see that it goes up and down. And that basically highlights relative bull markets and bear markets between the two parts of the economy. And right now, the Dow-Gold ratio is pretty high. It's probably going to come back down. And so even if the economy does well, we would expect precious metals to do even better. That's sort of what that ratio suggests.
Yeah, gold's been performing pretty well. We've been keeping a close eye on the dollar throughout all of this here. It's had a very level-headed approach towards some of the speculation and what we've seen, whether you're talking indices or gold. So these markets are kind of out on their own here right now. Alan, appreciate you joining us here. Good to have you on the Futures Show, and look forward to having you back at some point. Alan Hibbard, precious metals alternative money specialist at GoldSilver.com. Take a quick break. When we come back, Chris Robinson's here.